All right, so today we have a market breakdown on a trade I took today. This is the first trade of 2024 that I took. Yeah, let's talk about it. This was a good ass trade, I'm not gonna lie. Here, let me log in real quick. All right, so yeah, here's the entry, right? And here's the exit. And I just want to break this down because this is something, this is like one of the best models you can get when it comes to trading pure price action. It's a market maker model. Smart money reversal, right? The market driving price higher, inducing buyers thinking this is just going to go to the moon, and then reversing and trapping them in this trade. And all the liquidity that they engineered on the way up, they are now taking. So let me just show y'all what that looks like, right? Because what you're seeing right here is this is the buy side of the curve, and this is the sell side of the curve. Original consolidation, market maker model. There's a few different ways you can trade the market maker model, but price is fractal. So when you see something like this happen on like a daily time frame, 4 hour, whatever, you just got to know that this can happen on any time frame. So this is the same exact thing you would see on a higher time frame, and this is just on a 1 minute chart. So you can see right here, right? Like when we started right here, hold on. Okay, you can see it. So when we started right here, this big push up, all it's doing is engineering liquidity for the sellers to take on the way down, because the market is just putting people in trades to take them out of it. So just look at all the liquidity that was engineered on the way up. I'm gonna talk about the higher time frame narrative too, but I just want you to see this first, like the precision, right? These are all swing lows that are being targeted on the way down, right? So you got to be thinking that when you're on the buy side of the curve and you know you're heading to a key level, you got to be thinking like, where's all the liquidity spots for the low resistance liquidity run? Where are they going to be resting at for when we reverse and come down? Because it's always about who got more to lose. When we're way up here, when price is way up here, the buyers have more to lose because they're buying, they're moving their stop losses in a profit. So once we reverse, we're aiming for all of their stop losses on the way down. And then the final exit here, you see. So yeah, look at all these swing lows. Just swing low, swing low, swing low, swing low, swing low. These are all liquidity points that are targets on the way down. So when we're on the way down, right, when we're reversing from the buy side of the curve, all of these bullish fair value gaps, like right here, all in here, we want to see those get disrespected. That's going to confirm that you're on the right side of the market. If price would have came down here and held, that would have meant that we're not going down, we still going up. It like faked out like it wanted to hold with this candle right here, but instead it ended up giving us displacement down, right? Closing below. That's what you want to see if you're selling in this situation. So I actually missed out on getting in like right here. People try to say this was a breaker, but it's not really a breaker, but I can see why they said it. It's still a great entry. I would look at this more as probably like an order block from this candle up and then these down close candles, and then price coming back up, tapping it right here. That would have been a good entry for me. It was a couple minutes before like macro 950. It was like what, 945. So I was just waiting on something better, honestly, since it was my first trade. And I don't really see this as a breaker because this didn't take the high up here. The high is still way up here, right? If this right here would have taken this high and then came down, broke this low and then came back, now it's okay, it's a breaker. But either way it goes, like, it don't really matter about how you get in as long as you have the narrative. So even if you saw this as a breaker and you took this, that's still a great trade regardless. But yeah, buy side of the curve, sell side of the curve. So right here, I didn't get in there. Once I saw This fair value gap right here is not marked. Once I saw that get displaced through, I felt a little bit more confident. So pow, and then you got this swing low here. So at swing lows, right? I'll probably make a separate video on this, but like at swing lows and swing highs, you want to see them get displaced through. Like you want to see them get ran through like that. If you have price doing something where it's like, let me try to find an example. Like you see how this swing high here, like this got displaced through, that's good. That's what you want to see. But if you see like a high get ran and it's not really displacing through, I'm trying to find an example, but or a low, kind of like this one right here, this swing low. Can you see that? Yeah, this swing low. When it first got here, it didn't displace and hold through it, like it kept like, you know, playing around right there. You want to see it displacing through. That's going to give you the confidence that it's going to keep going in the direction you're wanting it to go in. If it's playing around, like barely running it and like wicking out at the top and stuff like that, then that's not a strong sign for you, right? That's not a lot of conviction for you. But yeah, so once I start seeing these gaps get inversed, that gave me the confidence to hold. Here, I'm not gonna lie, I thought about cutting at break even just because it was bouncing around a lot right here, but it was still kind of respecting this inversion fair value gap, like the bodies. And then this right here had me really about to cut it, but then that next candle opened up and dropped immediately, so I held. And then once I saw the gap get left here and this get tapped in to this fair value gap and this area, I was like, all right, we good. And then I was like, yeah, I was telling the group too the whole time, like I call this trade in my group, of course, y'all already know, right here. Pow, the before at 9:50 macro time and the after at 10:05. So yeah, I was just telling people in my group the whole time, like this thing for the melt, because I was seeing us on the sell side of the curve. And I'm gonna talk about the narrative too, because we're just talking about the 1 minute right now. I'm gonna zoom out and talk about the narrative, but this is just like the trade management part of it. These inversion fair value gaps, like the way they were respecting and holding, yeah, I was telling my group right here, like I need a close below this to feel good. And then I got it right here, and that made me feel good. I didn't add a position because I didn't want to be like greedy, but if I was gonna add a position, it probably would have been somewhere here or here. And then it just melted. It just ran for these lows in TP, and then it kept melting down here. So let's just talk about the like the higher time frame narrative on why I even took this trade in the first place. We got our daily chart. This is for the continuous chart on the NASDAQ, right? So the daily wasn't showing me too much, but I knew that we were getting back to like this key level up here, right? We had a daily volume imbalance, and then we also had a fair value gap right there. So I expected some type of bearish reaction based off of, and I'm gonna show y'all this, based off of the CPI news and everything like that, because today was CPI day. So it's ending in a doji right now because like the day's almost over, but like it went up here and tapped these levels. So I anticipate that we will have some type of at least quick bearish reaction. That's the 4 hour. The 4 hour it really wasn't that important to me today. So 1 hour, let me try to make the best of this real quick. All right, so this wick right here, right? This wick up, that was the CPI move, 8:30. It cleared London highs. London lows had already been cleaned too, but what I was looking at, because these levels you're seeing right here are higher time frame key levels, that fair value gap, that daily fair value gap, and this daily volume imbalance right here. Once we ran these highs, I'm looking at this low, right? This is a PM session low from Wednesday. And I'm also looking at this low right here because this is an AM session low and it's relatively equal to this low. So we got relative equal lows. And then I'm looking even further left and I see this big fair value gap right underneath this swing here. So that's giving me like everything I need to see as far as wanting to take sales in the market today. So this big displacement that happened, right? The CPI move, it didn't run this low. It left it, well, it barely ran it. This low right here, it barely ran it, and it left like relative equal lows. So at this point, I'm just sitting and watching to see like how the open is going to react, and I'm trying to see like which way is the manipulation going to be, right? So we got this big gap on 15-minute chart right here, and then we have the open. This is 9:15. The open candles right here at 9:30. It shoots up, right? It's shooting up before the open, leading up to the open. Let me just go back to the 5-minute real quick so I can explain this to y'all. Y'all see like why I'm bearish on the higher time frame. So I'm waiting on the manipulation because I'm bearish on the higher time frame, because we're tapping these key levels, these higher time frame key levels, and I see that all this liquidity is being engineered, right, for manipulation leading up to the open. We're filling the gap from the CPI move right here, right? You can see it on your 15-minute chart. So we're filling that, we fill it, and then we start to reverse. Once I got this formation at a key level, I'm like, okay, we're reversing. Now we're possibly on the sell side of the curve. So that's what made me go to the 1 minute, because I'm always entering off the 1 minute right here. Once I saw that reversal, I knew that this run was manipulation, and then I started looking at these gaps to be disrespected, these bullish fair value gaps. We got inversions, we got breaker or order block, whatever you want to call it. We got displacement down. We got all this right here. We got time, 950 macro lining up with this move. We have relative equal lows here, here, and yeah, that 1 hour chart, those lows down below, all this area down here, that's your runner target. And that's why I took this trade. So I think it's just important to know like which side of the curve you're on, long term and short term, because if you're on the sell side of the curve on a higher time frame, right, and then you look within that move into a lower time frame and you're on the sell side of the curve there too, all that is time aligning with price, right? That's when you're locked in and you trading the algorithm. Yeah, this was a good ass trade. A lot of people in my group took this trade, and not only this, a lot of people in my group actually caught the trade up here. They got the entry before I can even get in, and then some people caught these legs down here. So the narrative is all the same, right? Their entries up down here. You see this low right here, you see this low, we were talking about this. You see how this low right here, how it got displaced through, it didn't play around when it ran it. That low right there, that's telling you like if it pulled back and it hasn't hit its final destination yet, if it pulls back, it's pulling back to continue. So that's a pro tip. And now you got the buy side of the curve right here. Yeah, this is beautiful price action today. I'm happy that my first day taking a trade, it looked like this. And that's all I really got for this video. So until the next one, out.